Hello, everybody. Welcome back to the show. It's a beautiful, plumping pleasure to be here with each and every one of you. Now, you know what? This is not just another conversation today about money. This is a conversation about ownership, about leveraging, right? Ownership of your life, your decisions, your future, and ultimately your legacy. Because I want to be honest with you about something. A lot of people are working hard. There is no question of that. They're earning income, doing everything they were told to do, but they're still not building well. They're still behind. And more importantly, they are not building something that will outlive them. So today, on this live stream, we are going deeper. We are in fact going very deep. We are talking about the real estate foundations of wealth building, how to grow your money, but not only that, but how to leverage the number one wealth builder in America, how to leverage and control assets without necessarily owning the entire asset. And I want you to stay with me on this particular live stream because I have my friend, my brother with me. I'm not going to be having this conversation alone. I have brought an expert. I have brought someone who understands the game, not just from theory, but from real life, because he's been down in the doggets. He's been down in the marshes, struggling, folding his sleeves, hustling, and trying to build something meaningful with his life. Guys, join me. Welcome, Dr. Edimo Harik. Dr. Edimo, how you doing, man?
Oh, my brother Gustav, it's another beautiful day. I usually say every day above ground is a blessing. So today is that day that the Lord has given to us. Let us be rejoice and be glad. It's a beautiful day. How are you?
I feel blessed, man. It's an awesome day to be alive, brother. It's an awesome day to be alive. Hey, you know what? Let's get it going here. The one asset class that has produced the most number of millionaires in America statistically is real estate. And the
Correct.
reason why is because real estate gives people the possibility of owning major assets without necessarily coughing up the entire amount of money. And today I know we're going to be talking about investing, building wealth, but mostly talking about real estate and how that power too can be leveraged, right? One
Yep.
of the things I notice is that many people say, you know what, they want to build wealth. But what they really fear is losing money. How do you help someone reframe that risk, not as something to avoid, but something to manage intelligently?
You know, investment, I usually tell people investment is different from trading.
Correct.
And most people, I was just talking when I was shaving my hair today. I did a presentation at a barber school a couple weeks ago. I went
Yes,
back
I
there
remember
today.
that.
I went back
Yeah.
there today. The folks were pretty happy to see me.
By the way,
Some of them were asking when I'm coming back and stuff. They want to create their brokerage account and stuff. And again, this is just a way of me giving back. I don't charge these folks anything, but it's just a way of me giving back to make the layman understand that there is an opportunity for you, especially in the market right nowadays. But
correct.
with respect to building wealth, right, it starts with that mindset. It starts with that mindset shift. And building wealth, gone are those days that we used to think that it's just the wealthy that could build wealth.
Hmm.
Ronald Reed, I always refer to this guy. He was a janitor making less than $30,000, but he died with over $8 million in assets. So if Ronald Reed, being a janitor and at the same time in the evening time working at pumping gas, could build that, then I think everybody could build that. But the mistake that a lot of us are facing these days, or we don't want, is time. We are not patient. If you look, especially right now in the stock market, everything is on discount. But you know what? Regular people are running away from the market. Meanwhile, this is an opportunity. If you haven't even started, this is the time to start. Because guess what? Maybe Starbucks is down 10, 15%. Maybe Costco is down 20, 25%. Guess what? Most people are rushing now to Costco as a result of their gas. I saw this headlines. They are getting into the stores. What does that mean? The next quarterly report, Costco is going to report blockbuster returns. And guess what? Those that were buying at the low, they'll start making incredible profits right there. But the thing is, most folks they don't have that mindset. If they put in $100 or $1,000, if it goes down by 10%, oh, they run away from the market. They just want to start seeing quick gains. And when they see that 10%, they want to catch it out and they want to live life. No, but building wealth takes time. If you are not in that mindset of building for at the minimum 10 years, then you're just gambling in the market. That's gambling. If you have that mindset of building for long term and consistently plugging in, whether it's $50 a month, whether it's $100 a month, whether it's 500 or $1,000 a month, I'll tell you 10, 15, 20 years from today will make a big difference. I did while they were cutting my hair. This guy was curious. He wanted to get started. He is a student at a barber shop, at a barber school. I have my friend here that's watching. I used to take him to that barber school. I still go to a barber school to cut my hair. I'm like,
That's
why
right.
should I go and pay $40 or $50 at a barber shop? Meanwhile, I can cut my hair and tip them for less than $20. So I go there. But this guy was really curious today. Was like, you know what, Dr. Dimo, how can you help me? I really want to get started. I really want to start investing, but I don't know how. I say, you know what? The owner of this school is putting a list together. Get your name on that list. I'll come by here. I'll show you guys how to open a brokerage account. I'll show you how to set it up. I'll show you how to constantly invest. I did a projection, just $100 every pay period, right? This guy is 31 years old. In 29 years, $200 a month at 15% return will give him over $1.2 million. And you know how
Powerful.
much he has put over that time? He has put $69,000.
Power of
And
time.
he will be making $998,000 just with $69,000. Isn't that magical?
And Dr. Dimo, I like the fact that you just got off the gate with some of these practical things. Because one of the things I've realized in this entire time, the last decade that I've been working with multiple clients, from high income, high earning clients to mid level to middle class people, is there is this myth around investing, right? People believe that it requires a certain kind of knowledge. Yes, you need to certainly be financially educated, but it doesn't require genius knowledge. People
No.
believe it requires a certain kind of income. It requires a certain kind of sophistication. And when you just talked about getting to the barber shop to cut your hair, and that reminded me of how I started my first portfolio on Robinhood. Because when I came to America in the year 2000, 23-year old, certainly 45 pounds lighter, a lot of hair on my head, guys. I wasn't born like this, okay? I used to have some beautiful hair, right? And a few years later, I started getting bald. But before then, I used to cut my hair twice a week. And each time I go to cut my hair in a barbing school too in Minneapolis, I will spend about $25, right? So when I started getting bald, I decided I was going to be cutting my hair myself. And so I'll use Gillette and all that stuff. And then after about 2, 3 years, I told myself, but what have I been doing with the money I used to cut my hair? What changed other than the fact that now I cut my hair? I no longer have to spend $100 a month. And I opened a Robinhood account and started investing that money. Lo and behold, I mean, I used to use that account like my piggy bank. And it goes all the way up to about 90,000 today, somewhere about 50 grand. Now, why am I suggesting that? I am saying these are practical ways by which people can invest. You talked
Mhm,
about Costco, for example. They just opened a Costco in my neighborhood. They took 7 months to build that Costco from
mhm.
ground up. And the first thing you need to understand, guys, let us give this hack to you free. All right. Anytime you see a Costco coming, know that there is magic that's going to happen in that area because Costco has done research.
Oh
There's
yeah.
no company in America that does research like Costco. It is known by everybody. So when
Yep.
Costco is coming to any neighborhood, all other businesses start rushing. Guys, you are shopping at Costco. Do you own Costco shares? But now, Dr. Dimo, let's make progress here. And before we do, big shout out to Blessing. Jerome is on the line. Um, 23 Samson. All of you guys, welcome.
Oh yeah, those are my folks.
Awesome.
Blessing. She is this lady. I just want to give a special shout out. She's in Nigeria, and I'm sure it's past midnight in Nigeria. She's still up here watching. She's intentional about building wealth, and
Correct.
I have told people it's not how much you make, it's what you did with what you make. That's what builds wealth. It's not how much. So a big shout out, my friend Samson, number 23. That's my boy from Dallas.
Awesome.
Glad to see you guys here.
Awesome. We also have from joining us from Instagram, we have MC Dasi, one of the best top-notch MCs and communicators in America. He also has a very powerful podcast called The Everyday University. Guys, check him out. Check his podcast on YouTube. He's doing some marvelous work. I also have my friend April Sabral. April, I met April in a conference in Austin, I believe, about 2 years ago, and we've been friends on Instagram. I'm glad to see you hop on, April. I hope this is of value to you. April
And
is a top level
guys,
coach.
please, this
Mhm.
is we don't make any money out of this thing. We're just committed to pass this knowledge out because this is knowledge. Again, this is my president of Camcosa in San Antonio, Donatus Bernoulli. Thank you for joining. We don't make any money out of this thing. We're just committed to pass knowledge so that the layman can benefit and tap from this world building journey. So most of the time, the folks that join us here, you either are not subscribed to our channel or you don't share our content. So if you find this content important to you in any way, shape, or form, please make sure it reaches as more people. That is just the way we can say thank you for helping us spread the word. Let's go.
Absolutely, absolutely. And welcome to President Thomas Kamanda, my president emeritus out of Austin, a big brother and friend, Nene Sap, out of Maryland, I believe. My big sister. Thank you guys for hopping on. So, Dr. Dimo, let's make some progress here. One of the things we're going to talk about today is investing, real estate, most importantly, right? And I
Yep.
really want us to break down that concept because real estate sounds like science. It's a broad topic. It's like grocery. Grocery could be anything. It could be bread, it could be sardine, whatever, right? And I want us to break that down. Now, one of the things is real estate has built more generational wealth than almost any other asset class statistically. What makes it so powerful, in your opinion, not just financially, but from a legacy perspective? What makes real estate powerful?
I'll tell you, there are three ways in building wealth. Three. Number one is starting a business. Number two is investing in the stock market. And number three is in real estate. If you're working for someone, no matter how much they're paying you, if you don't let that money work for you, there is a high probability you're still going to be broke. We have been discussing multiple times here about investing in the stock market. If you follow us, there shouldn't be any reason at this point in time you're not investing in the stock market. If you're following us and listening to us, so we're not going to concentrate on that. Starting a business, I was listening to a podcast today, right? With this guy appeared on Diary of the CEO. He is an Indian, I can't remember his name, but he stated that don't go and
That's my man, Jasprit Singh.
yep. He stated that there is no need for you to reinvent the wheel.
Correct.
If you look at most rich people or wealthy people, they came from taking something that already exists and they change it to their own to satisfy the interest and add value to their customers. If you see like if you see like Microsoft, like the Excel, it came from Lotus. If you see like Amazon, if you see like Walmart and Sam's Club, they started with Sears. So Walmart stole Sears and Kmart's idea to build Walmart. So if you're today a podcaster or if you're today a YouTuber, all you should do is to follow those people that have 2, 3, 4 million and talk more about the shows that have multiple millions. You shouldn't be going out there every day and struggling trying to come up with content. And the day I master this game, just wait. By the end of this year, I'll have 10,000 followers.
That's
End of
good.
next year, it will be
It's
50,000.
exponential.
Because the name of the game is for you to follow the people that are winning in the game, tweak it in your own way, and you will grow. This thing is not
Absolutely.
magic, it's not magic. But going back to real estate, right? Before I even answer your question about real estate being one of the strongest facets in world building, I would like to give you my journey, how I even got myself into real estate.
That's an interesting one.
So, fast forward about 10, 12 years ago, when I moved to New Mexico, when I moved to Texas, San Antonio, uh, we got our first home, right? And I started seeing on Facebook there was an advert coming up on my Facebook app that are you interested in investing in real estate and stuff like that? Click and join this group, blah blah blah. I kept seeing that coming up from time to time. One day I just said, okay, this thing it's not gonna cost me, even if it does. But let me click. There was a group here in San Antonio. It's called RIA. It's Real Estate Investors Club in San Antonio. So I clicked. I joined that group. They had monthly meetings. Within those monthly meetings, I'll go to those monthly meetings and they will talk about how you can buy a home for cheap and you flip it, you make some money out of it. We have hard money lenders here, private lenders here. You don't have to go through the bank. So I went to that meeting every single month for about 8 months. I started networking and stuff. Again, they were charging about $200 a year just to get to regular membership. To get to the elite membership, they were charging $20,000. Guess what? Hell no, I didn't have $20,000. How can I? And when you get $20,000, that's where you start meeting with all the insiders that will show you the deals and stuff like that. So they invited us to a Christmas party once. I went to that Christmas party and they had us separated. They had the elite in one room and they had the regular folks in another room, right? So the regular folks, when we finishing there, they gave us simple things and stuff. After that, I just went. It was at Hilton.
Hmm.
I was sitting at the lobby there, just taking a beer. I saw one of those elite members. They were coming down the escalator with a good bottle of champagne. So this is one thing that I learned in life, and I've always moved with this. Just talk to somebody.
Yeah.
There's no reason for you to be afraid to talk to somebody. When you see somebody, just say hi and engage. If engage in a discussion, how is your day going? Some of them might not answer, some of them might answer, and that might be your
Okay.
springboard to
All
the
right.
next level. Fast forward, right? I said hi to that guy. I wished him happy Christmas. It wasn't Christmas, happy holiday season. I said, do you mind a drink? He was like, oh, no, thank you, Heinrich, but I don't mind. He didn't know me. He said, thank you. I don't even drink. I said, do you mind giving me your champagne then if you don't drink? He said, oh, you can have it. So this guy, he sat with me on that lobby, the bar. He drank water and we started discussing. He has been an elite member for the past 10 years. He had more than 20 properties in San Antonio.
Wow.
So this guy also was a hard money lender. He owned a private lending company. So I asked him right there. I said, you know what? I've been coming to this place for the past 11 months. Unfortunately, I don't have that capital to buy into the elite program, but I really want to get started with this thing. Do you mind being my mentor? This guy did not even think twice. He said, Heinrich, here is my number. Call me at any time. If you find any deals, send it my way. I will analyze it and I'll tell you if it's a good deal. I'll even work with my company, with you, to get private lending. I was like, whoa. From there, when that guy has any deals, he'll call me to just come and see what is going on and stuff. I found a friend during this time. He is in construction. I got with him and I told him, you know what? I want us to partner. You are the construction guy. I am the guy that will find the deals and fund the deals. Let's get into a partnership.
You just remodel.
Yep. 50
So you were
50.
flipping at that time.
Flipping. Yeah.
Okay.
50-50. I'll find a property. I will finance it. All I need from you, I'll bring the money to fix it. You fix it, and we split the profit. We did 10 properties together. 10.
Wow.
11 property. We bought that property on a Wednesday. It got burned on a Saturday.
So you had
It
insurance
burned.
on it.
Insurance started investigating me that I was arson.
Okay. But fast forward, keep going. Keep
Fast
going.
forward.
I have some questions. Well.
Yep. Fast forward. That was my intrigue moment into real estate. Right now, fast forward. I have more than 7 properties here in the San Antonio area, and we're looking with expanding. Again, the market is not as juicy as it used to be pre-COVID. Things have gotten really expensive. But as based on your question, real estate is one of the best things if you know how to do it, to leverage your wealth and also position yourself from a tax perspective, in which I'll discuss more as we continue the conversation.
That's awesome, Dr. Dimo. And I like the fact that you know your story is very enchanting. Your story also is very powerful because it gives some guidance as to how people get into some of these things. But one of the things that I hear from people, especially when it comes to real estate, is number one, the capitalization needed. And number two, the risk threshold is high too, because when things go wrong, it's not just a couple of $100.
Oh yeah.
For example, it's not like you bought a couple of $100 of stocks on the stock market and that company tanked. When things go wrong, thousands of dollars are lost. And sometimes you can even be in the hole, you can be on the hook for debt and things like that. So I
Yep.
want you to really talk because, a lot of times when we hear talks about real estate on social media, on YouTube, on Facebook, it's all rosy and juicy. You see people coming out of Rolls Royces, people flying private jets. But I want us to talk about the real deal here
Yep.
because you are a real guy, right? You are not some guy trying to, we are not here trying to create a perception, right? Do people make money in real estate? Where is the beef in real estate?
I'll tell you, before I go to the challenges in real estate, I'll give you some of the pros of real estate. If
Fantastic.
done right, right?
Mhm.
If done right, one of the pros of real estate is it pays you while you sleep in cash flow. That simply means maybe every month, depending on how many units you have. If you're making, say, $300 on one unit times 10, that'll be $3,000. So scaling also is very, very important into real estate. And what you are buying, like when I started, I didn't really know all of this, right? Buying a single property as opposed to a duplex or a quadruplex or an apartment complex, when you have it's real estate, you scale with number of doors. That simply means somebody that has 10 doors will beat
Mhm.
you all the time that you have 2 doors. Does that make sense? So number two is appreciation. Equity, you build equity. And if we can see those that bought properties during the COVID time, they're sitting on incredible amount of equity because during COVID, people were scared. The price of houses dropped. Those that got in, their interest rate was low. Then it became a point in time, the supply was very low. What happens? The demand goes up. So those people are sitting on incredible amount of equity. And I tell people, if you're listening to us, if you have a 2% interest on a property, don't. it should be your last option for you to refinance that property. Don't go and refinance on a 2% interest. You will not see that again in a long, long time. So these are certain things
Probably
that,
never. You'll never see it again. I don't
yep.
think you ever come
So
back.
these are certain intricacies, especially in real estate, that folks have to understand. There is a tax advantage of having real estate. And this applies especially to people that own businesses that have um, large adjustable gross income on your tax. So you can have accelerated depreciation. So that simply means if your property is, say, $30,000, right? You can divide that by 30 years and you can accelerate the depreciation on that. So you can deduct that on that property every year and align that to your taxes. You also can deduct your mortgage insurance, your mortgage interest
Interest.
on your taxes. Also, cost segregation, that is a big one from a tax perspective, and also the 1031 exchange. That simply means if you buy a property and you sell that, you buy a property, say for $500,000, you sell it for 700, that is $200,000 in capital gains, depending on how long you've held that property. You can do a 1031 exchange that gives you between a 60 and 90-day period to buy an additional property or to buy a property that is equivalent to that amount so that you don't pay any taxes. So a lot of these rich people, they do a 1031 exchange in order to bypass taxes. And some of these rich people, they refinance because you don't pay taxes on refinance. So they
On loans.
refinance
Hmm.
and take equity out of your properties and do business on that in order to short change on the tax part of it. Also leverage, right? Control you some of these properties. If you're an investor, they usually ask you for a 20% down. So for a $500,000 house, they can ask you, say, for $100,000. So you're buying a $500,000 house, but you're putting just $100,000. So you have that leverage to buy large assets, but don't put in as much.
Right.
Also, real estate is a good asset to hedge inflation. So the only thing about it is it's very illiquid. You cannot sell a bedroom if you need money tomorrow, unfortunately. So it takes time for you to for you to sell that. And so those are the pros, right?
Hmm.
Coming to the coming to the cons, the bad side of real estate, which everyone should be listening. Real estate, don't just have $20,000 in your account. You want to go buy a property to put $20,000 down.
Very
You
important.
will be surprised. You're one step away from foreclosure if you want to start investing like that. Because guess what? You buying a property, there is no guarantee that you'll rent that property in 2 months or in 3 months. But guess
Correct.
what? You will still be paying a mortgage on that property. So that large down payment, number one, a lot of folks don't have it. The closing costs, repair and maintenance, if you're buying an older property, before you realize your tenants are calling you, there is no heater, heating is not working in the house, water heater is not working, the sink has blocked. So you have to have some secure money somewhere for those unforeseen circumstances. Because if a tenant, hot water is not coming out of the house, there's no way you say you're going to wait for a month to get paid before you go and repair that. Unfortunately, they will need that done immediately. Also, on management headaches, some of these folks, they want to manage a lot of these properties by themselves. Guess what? A tenant calling you at 2 a.m. that their toilet is clogged. You will have to go to that property and try to unclog that toilet. So it's a choice that you want to do. Also, late payments, property damages. If a tenant doesn't, sometimes right now, my tenant, some of them, they're supposed to pay on the 5th, they pay on the 17th. My mortgage is due on the 13th. So if you don't have that reserve cash to make that payment, you're always waiting for a tenant to make a deposit into your account. That is risky. That is risky. And market market risk, the price, those folks that bought houses at the end of COVID, they will see that they are underwater with respect to their houses right now because
Fact.
the price of houses were elevated at that time compared to what they are in now. So some folks bought houses for 500,000, but the value of that house is 400,000 right now. That simply means if you sell that house, you might even be owing the bank as a result of that. So
If you don't have up to a hundred
absolutely,
thousand
if
equity.
you go around there just thinking that real estate is that easy thing to get in, no. Also, price determines profitability. You have to do your numbers. Before you buy, you have to ask yourself, am I holding for cash flow? Am I going to flip this property for profit? Or am I buying, fixing, and refinancing, which is the BRRRR strategy? Also, you have to figure out your key matrices. You have to understand your cash to cash return. That simply means if you put in $100,000 on a $500,000 house, how much return are you making in a year out of that? That's your cash to cash return. Your
Hmm.
cap rate, your internal rate of return, your debt servicing coverage ratio, all those things you have to understand them. I can't really start explaining each of them here, but don't just get up one day and say, oh, I want to buy an investment property, because you will be surprised if you don't do your due diligence that you won't even cash flow. You will be adding money to make your mortgage payment, and you will make zero or nothing. You end up losing money when you sell that property. So make sure you do your due diligence and reach out to folks that have done this multiple times. It's cost effective for you to do it right than to regret what you did.
That's powerful, Dr. Dimo. Now, from your experience, not only from your own mistakes, but some things you've seen maybe from mentees or different people who've come into the industry a little later, what are some of those mistakes that young and beginning investors in real estate do, and how should they think about that, and how should people avoid some of those mistakes?
Number one mistake is they hear folks getting into real estate, they get themselves into it. It's not everybody that has the guts to get into real estate. Real estate is, and most of the folks that get into real estate, right, they're doing this for the tax benefit. They're not doing real estate just for the sake of getting into real estate.
I want you to stop there because this is something very powerful you just mentioned. This is actually, to me, this is one of the redefining moments about real estate investing, because the messaging is a lot like real estate investing is a profit machine. It produces so much cash flow. You can make money in real estate. And why I really like the way you're breaking this down is because it's important for people to understand the different asset classes and also understand the risk involved relative to the capital infusion into those asset classes.
Yep.
You talk about something very important, the tax benefits of real estate. Nobody who invests can ever dispute that. To
Hmm.
me, I really believe that is the leading advantage of real estate,
Correct.
the tax advantage, not
Yes.
even the cash flow, not even the cash. Because you just gave an example, Dr. Dimo. You say, and I want us to talk numbers here if you don't mind, right?
Oh yeah.
You have about you have seven properties in San Antonio. How much does each of those properties cash flow for you every month
Um,
after cost and all of that?
I'll tell you, there is out of those seven, it's just three of them that is cash flowing.
Okay.
The remainder four, I'm adding money every month in order to pay the mortgage.
Okay, but you're counting on the equity of the home. That is, the equity
That's
grows
all I
over
have
time, and
left.
then
And also the
the
tax
tax
benefits.
benefits.
Yes.
Okay. Now, how much money did you invest in acquiring those properties?
Um, it depends. I'll just
Correct.
give you one example. There is one property, one of the properties I bought during COVID.
Mm-hmm.
So this is one that's really cash flowing. It's a
Mm-hmm.
small property. Again, that my friend that introduced me into real
Mm-hmm.
estate. When COVID hit, he had close to 15 properties that he was rehabbing, ready to sell. Nobody was buying properties at that time, and he had to. He borrowed
You have
money.
to force sell because
So
the lenders were
so
coming.
one of those properties he had already refurbished it and stuff. It was supposed to sell for about 180, 190.
Hmm.
So nobody was buying properties, and
Yes.
that is one thing I want to tell our viewers as well, right? When people are fleeing away from the market, that is an opportunity that is opening up for you. Don't look at the downturns, even in the stock market, as an opportunity for you to wait. Don't think that you can determine when the market is gonna go up. Don't do that. That's gambling. So I took a chance during that time, right? This property was refurbished, brand new, good to go. It was supposed to sell the AVR on that property was 190. He offered it to me for 150. So I bought it for 150.
Okay, that's
Then
about close to a 20% discount.
before we even closed, it seems as if he realized that what was going on. He wanted to pull back. I said, "No, man, you cannot pull back out of this thing. We are already in. We already signed the contract now. You
Yes,
cannot
it's
pull
not a
back."
good faith
So
agreement.
I got that property for 150. So I'm renting that property now for about 1,600. And again, the tenant just moved out yesterday. So guess what? I'm gonna be paying a mortgage on that before I get new tenants. But the
Correct.
good thing is my mortgage is about $1,000.
Hmm.
And I was making because I have a management company that manages I don't do it by
Hmm.
myself.
Hmm.
That's another biggest mistake that we do. We want to do everything all by ourselves, and we don't do the due diligence. A management company, they'll vet all the people that apply. They'll
Hmm.
make sure they collect the rent for me. They'll make sure if repairs come, they pass it through me before I approve the repair. They do all the work for you. Your
Hmm.
paperwork is done right and stuff every year. You have to go all through that because you want to save 8%. No, I will pass that to the people. But what I'm trying to say here is that property at cash flow about 400 or 300 after paying management company.
That's awesome.
Majority of those profit of those cash flow 300, 200. To be candid, that is no profit. Looking at coming back to what I told you about the cash to cash return. So the way I calculate cash to cash return, if I put in $100,000 in a property,
Hmm.
and at the end of the year, after paying management fee, paying mortgage and stuff like that, I end up with a $10,000. That'll be 10%.
Hmm.
That's my cash to cash return, right? If I end up with 5,000, that is 5% because I'm
Hmm.
putting 100. After paying everything, I'm ending up with five. So
Hmm.
you have to start thinking in that perspective.
Hmm.
Don't just go and put money out there. Oh, I'm buying a house. No, 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 no. You are better off if you don't have a high adjustable gross income to deduct from. You're better off investing in real estate investment trust in the stock market. Those will
Hmm.
give you between 8 to 13%, in which you don't have to take care of toilets, you don't have to take care of tenants, you don't have to take care of vacancies. There are a lot
Hmm.
of things that you can manage it on that. But if you still want to bite the bullet, you have to understand that you have to keep some cash aside, especially for the unforeseen. Because I've had three properties at the time in which there were no tenants. So three properties plus my mortgage that I have to stay. If you are not better positioned, you're
Yeah.
just in the position to file for bankruptcy or
You
to.
might lose your head or you lose your home.
Yep. Yep.
I like that, Dr. Diwan. Thank you very much for your transparency, right? Because one of the things that is important is for people to really understand the dynamics of this thing. Is your primary home an investment or not?
No,
Okay.
your primary home is not an investment because you are living in that property. It's not an investment. So, everything being equal, fingers crossed, maybe we'll live here for the next 10, 15 years. Maybe we get out, we sell it, we pull some equity. But that's no guarantees. There are no
Correct.
guarantees on that. And if there are no guarantees on something, you can't call that as an investment. Your primary home is never an investment. And you cannot calculate your primary home towards your retirement as well. That is not part of your retirement plan. So
Hmm.
don't put that because you don't know what might happen. The value of this home, of your primary home, might fall tomorrow by 20, 30%. You might be underwater like those that bought during the during the end of COVID, they are underwater today. It is not. And I usually advise people don't consider your primary home as an investment.
And the reason I asked that question is because I was listening to a podcast the other day, and this gentleman is a retired. He used to focus only around retirement and things like that. And he said something that hit me hard. He said about 60% of retirees have 70% or more in their retirement wealth held down in the house. And that house, even though they maybe have finished paying the house, it is worth 700,000, but it is not money, it is not
Oh,
liquid.
that's not liquid.
And they need the money at 65, they need it at
Yep.
70, they are sick, they want to live their life, right? Now there's a process to convert that house into
Yep.
money. And then when you convert it, there is also the tax aspect of it, because
Yep.
now there's some capital gains, right? So they
Yep.
are caught in between wanting to either sell the house or let it go and package it into a trust so that their children can have a step up in basis benefits. And guys, don't worry too much about some of these terms. As you stay with our communities, you're going to learn these things. Now, Dr. Dimo, I'm glad that you broke that down that way, because now it gives a good perspective. A lot of times I hear people say, hey, no, buy your first home because that's an investment. Your primary home is not an investment.
Nope.
Your enjoyment in that home is the fact that you're living there with your family and all of that. Now, this brings me to the next question. What are some of the important considerations people have to make before buying a home? And I say this because one of the things when we come, especially to a country like America, the number one message you hear all the time is that the American dream is owning a home. The American dream is owning a home. I know that with what you know now, with what I know now, if I had to do it again after two foreclosures and different things, I would go about it differently. Maybe the timing in which I bought a home might not have been the right time. Or maybe the approach to buying a home would have been, instead of buying a single family home, I could have bought a duplex and have renters on the other side helping me with my own mortgage. Or maybe I could have bought a home with four independent bedrooms and bathrooms so that I could rent out those other rooms before I even get married, and then I can get the people out. I want you to talk about some of these key considerations people need to keep, because when it comes to buying a home, because the real estate industry has marketed the home as the apex of wealth, as the apex of achievement, as the apex of, if you don't buy a home, you are a failure. I see a lot of people who are relatively successful, they are doing well, they have good savings, they have money invested in the stock market, their net worth is significantly high. They are in the early 30s. Their net worth is already somewhere around 400,000, which is above the average of their age group. And they still feel small. They still feel like they're not achieving because they don't own a home. I
Yep.
want you to talk about those considerations that people need to put in front of them before they buy a home, Dr. Edimo.
That's a very good question, my friend and brother here. Let me break this down. If you're single, no matter wherever you're living, right? If you're single and you are thinking of buying a home, these are the things that you should take into consideration. You should take into consideration cash flow, right? And you should take into consideration making money out of that property. So, if you're single, maybe you're not thinking of getting married within the next 5 years, don't just go and buy a single property home. If you can, buy like a duplex. Number two, don't buy a home more than 30 to 35% of your income. What
Gross
you're
or net?
bringing net, not gross,
Thank you.
net,
And what
net
is net income? Income after taxes.
taxes. Yes.
Okay. I
So
wish people would be listening very carefully, because
so
this is
don't
critical.
buy a home more than 35% of your net income that you're bringing every month. Let me break this down. That simply means if you're bringing in a
Hundred
thousand
thousand.
dollars or $2,000 a month, right? Your mortgage shouldn't be more than 750 to $800 on a 30-year mortgage. How can you do this? Before you even think of buying a home, don't just think of the mortgage. There are certain things that you have to do from your end. You have to figure out that your credit score is at excellent shape because that's what is going to determine your interest rate. And interest rate is one aspect that can kill you, especially you buying a home. Majority of folks don't even understand this. When you're going to buy a home, you're better off negotiating on the interest rate rather than the price. A 0.25 basis point interest rate can save you hundreds of thousands on a property as opposed to them asking them to give you a $10,000 reduction on the price. So
True.
if you're going to buy a home, request that they buy down your interest rate from what they've given you, as opposed to asking for a price reduction, because that will save you a lot. Secondly, don't, there is nothing like a dream home. One of the mistakes that I made when I came to this country, I graduated, I started working. I could have bought my two-bedroom, whether it's an old home, old house. That house could have been paid off today. It could have had incredible equity. Don't sit back and you're saying that I'm going to buy a dream home. I'm waiting to buy a dream home. There is nothing like a dream home. Number two, some of us have made those mistakes. There is no need for you to go buy a massive home. I'm telling you this. There is how much home can you get? No matter how much money you make. There is this guy that I listen to, he's called Remy Sethi. He is renting an apartment in New York. This guy is worth close to $50 million that he's renting. So let me ask you this. Before you want to go buy a home, you have to do this analysis. And if you need help, reach out to us.
Yes,
We
we'll
will
help
be
you.
more than happy to help you to show you the
I just
real
worked with a
picture.
client on that last week
Yep.
extensively on
Like
all the
right now, I'm
configuration.
working with one of my clients that
Correct.
she's looking on buying a duplex. She's a single mom with her son. She's buying a duplex and renting the next. If she didn't have the knowledge and stuff, she could have gone to just buy a single property home. That will not generate her anything.
And
But
got into trouble.
this is what you should be looking at when you want to go buy a home. You have to do this analysis. Where are you right now? How good is your credit score? Where are you with respect to your debt? Because they do some an analysis that we call a debt to
Income
equity
ratio.
income ratio, right? So
Yeah.
your debt, how much debt do you have? How much equity do you have or income you're bringing in? If your debt to income ratio is high, the number that they can approve you to buy a home will be low. So you might be dreaming of buying that $500,000 house, but guess what? You don't even qualify. And you can push it like the time they were giving those subprime loans, you find yourself in a deep water because 2, 3, 5 months from today, you won't be able to pay that house. So, number one, if you're staying in a home that you're renting, this is one of the analysis. If I knew this is what I could have done. If you're comfortable in that house, you're paying $1,000 and you have to go and buy a home that you're paying $2,000. The $2,000 that you want to start paying in that home, you can invest the $1,000 difference either in the stock
Stop, stop.
market.
Take that over. Listen, guys, if you weren't paying enough attention, I want you to listen very carefully to what Dr. Jimo is saying here. Because this can be the difference between you succeeding to become a millionaire easy and still become a homeowner or die of stress and not achieve any of them.
Yep.
Dr. Dimo, take it over again.
So I'll say it again. If you're renting a home that you're paying $1,000 a month in rent, and you're thinking of going to buy a property that you're going to be paying $2,000 in mortgage, This is what you should think. If you're comfortable in that rent space, hold on to that. That $1,000 difference. I'll do the statistics here. That $1,000 difference,
Do you want me to share my screen?
let me see.
Or you can share. Try it and see. You
Yeah, you
probably
can share it, and we can do that. You can share since you're the one hosting. Let's do this so that folks can see in real time.
guys, just give me a minute here.
Hang tight, guys. You guys should see
Just hang tight a
magic. This
minute.
is
Yeah.
magic.
This is it's important that we share this just so that we okay. Awesome.
All right. So on that investment calculator at the beginning, again, just to bring back some context. If you're renting is not a bad thing. Don't feel as if you're left behind because you're renting. Those that can be renting can make incredible wealth, can build incredible wealth over time, as opposed to you that bought a property. All right, you are renting and you're paying $1,000 a month, and you want to buy a property that you're supposed to be paying $2,000 in mortgage. Take a step back. If you don't have good interest rate, if it doesn't still fall within that 35% category of your net, don't make that mistake to go do that at this point. The extra $1,000 that you're supposed to be paying for your own home, put that money in the broad index market. Let's start with the $1,000, and we
Hmm.
leave it at 12%. Every month, let's put that $1,000 out there.
To work.
Yep.
So we
And
basically postponing the owning
we are
decision by 10
postponing
years.
the owning decision here. Put that, most houses is 30 years. Put that for
Mhm.
30 years and calculate.
Wow.
That is $3 million. And all that you have put in that, you have paid at that property will be $360,000. You're making a $2.7 million in profit. There is no home that you buy for $300,000 that after 30 years you appreciate to 3 million. Never. Never. And that is why you're still seeing multi millionaires, rather than paying $5,000-6,000 in mortgage, they'll prefer to pay $2,000 in rent, and they invest the 4,000. Just put, like Remy Sethi, right? That guy
Hmm.
could buy $1 million house.
Correct.
But just imagine, put $2,000 a month there, just investing. How much is that? That's
6 million.
6.1 million. So these are some of the smart ways of doing. But the life creeps, pressure from the outside. It makes us feel that we need to buy a home. We need to buy a big home. If we're not paying seven, eight, nine, $10,000 in mortgage, you have not arrived. I just want to tell you guys something, and this is clear. Your first 5 years on a 30-year mortgage, right? More than 89% of that is going on interest, taxes, and escrow. So about 11 or 8, between 8 and 11% is going on your principal for your first 7 years on the 30-year mortgage. So all what you're hoping for within that 30 years, that 7 years, is not to lose your job, be able to pay that house, and hope that the market appreciates. If it doesn't appreciate, you want to sell that house, you will be selling at a loss. And just imagine in 7 years, you have gone through this. So it's not about a dream house. It's not about buying a humongous property. It's all about doing your due diligence and making sure that whatever you're buying or whatever you're paying, it shouldn't be more than 35% of your net income, because that will give you some disposable income to also take advantage of investing especially in the stock market, and having a foundation, which is your emergency fund, and also still live life. Don't get yourself into a chokehold that if you have a flat tire, unfortunately, you won't be able to make mortgage payment.
Well, Dr. Dimo, that's so powerful. And I'm glad the way you broke it down, right? And guys, there is no one size fits all. Our goal here is to make sure that people have information because when you are not informed, you are deformed, right? And when you are deformed, automatically what happens is that you make uninformed decisions. And when you make uninformed decisions, then you become paralyzed. And when you become paralyzed, automatically you end up depressed, angry, frustrated, broke, and dangerously unhappy with yourself. So we want to make sure that everybody understands that for some people like you who are listening to us, if you get the education, you get the mentorship, then the American dream will actually be an American dream. For those who don't get the education, who go out there trying to do things based on hype and what they see others doing without understanding the edge cases, you will wake up from a dream which has transformed into a nightmare. And between you and me, as I'm getting older, Dr. Edimo, unfortunately, I'm getting more and more intolerant of stupid crying, complaining. And I'm just saying, because people don't want to spend the time to get what is going to help them, they'll go do stupid things and then they come back, they're complaining, and then they expect you to sympathize with them. I'm sorry to hear that. I wish, no, 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 no. Listen, everybody listening to us, adults, the people listening to us are above 30 years. So at this level of your life, there's no longer emotionalism in this stuff. We're here to talk to adults and people who want to go a certain direction and who are serious about their life. If you are considering buying a home, you're considering investing in real estate, don't go at it without mentorship.
Good.
Hear me and hear me very clearly. Don't go at it because you are not going to be losing money. You buy McDonald's for 19 for $12. You're going to be losing significant money. And a lot of times, a big part of that money has been borrowed.
Yep.
And I know what I'm talking about. I have foreclosed on two homes before. I have filed for bankruptcy. I know how hard it takes to recover from these things, guys. You need to have an extra dose of resilience. You need to have an extra dose of moral, mental, and spiritual fortitude. Otherwise, your life is over forever.
True.
I'm not saying this to frighten anybody. I'm saying this to tell you that the information Dr. Edimo has been sharing, the information I'm sharing here, we are discussing about real estate and some of these things. Take it seriously. Take it seriously. Let me tell you what really matters, guys. Forget the hype. Forget the hot air. Forget all this bullshit. Let me tell you what really matters. Do you go to sleep at night in peace, knowing that if you have a $5,000 emergency, you can solve it without calling somebody on the phone?
That's a
Do you
big
go
question.
to bed at night knowing that where you are, should your employer call you and say you are fired, you can pay your bills comfortably for 1 year and you will not need to be under pressure? These are the things that define wealth, guys. Let me
Absolutely.
tell you guys, it's not the size of your house, it's not the kind of car you drive, all that stuff. So
Yep.
when we are talking to you, we are talking to you from the premise of how to safely and logically and intelligently build wealth in a way that you progress carefully. Wealth is like climbing the stairs. There is no elevator to wealth.
Yep.
There's only the staircase. And a lot of times the staircase gets slippery. You will slide down and
Oh
fall,
yeah.
and you will start again from the middle.
You
Dr.
know, the
Dimo,
other
I
day.
know we didn't even cover 1/10 of what we had to cover today on the real estate thing because it's so big. But we'll come back with that again, right? But
Yep.
one thing I wanted you to talk about before we call it an evening, right?
And I want to give a shout out here to Be Clear. Thank you very much for the stars. We started getting stars, man.
Oh,
You guys
awesome.
are sending us stars. So, and special thanks to Samuel Grace, Blessing, Mata
Mhm.
Musa, um, who else we have here? Musa Faith, Be Clear.
Hey,
Thank you
Martin
guys.
Funde is on the line too.
Thank you Thank you so much, guys, for hanging tight, and thanks for the love. Yeah, we appreciate it.
Martin is on the line too. Hey, Martin. Martin
Oh,
says,
thanks, Martin. And
yes, let me see.
also,
Martin
also
says,
JB from San Antonio, as well as my president. Oh, Martin Frundi is here as well. Thank you, brother.
awesome.
It's been a while.
Yeah. So, Dr. Timo, I think one of the things I would like you to touch on before we wrap up the live stream for today. We're already at the top of the hour, right?
Yep.
How do you balance investing in the stock market and investing in real estate? How do you balance that? And what are some of the considerations you would give somebody who is starting off how best to approach the two? Because they can
Uh,
be complementary for sure.
Oh yeah. And again, there is no one size fit all. Everybody, you have your financial needs, you know where you are with respect to your finances. So there's not really any one answer that will tell you, "Oh, do this, have this percent in real estate, having this percent in the stock market." And you have to figure out where you want to get to. What is and I tell people every day, I ask myself, what is my why, right? And what is enough? Because one of the things that I tend to realize, especially as we age, life is beautiful because it's difficult, and there are no guarantees, and there is nothing promised. Just because that life is difficult, that makes it beautiful. But at the same time, you need to ask yourself, what is your why? What is that thing that you say enough? The other day, I asked folks that were following me, what does money mean to you, right? Some people said freedom, some people say it's a tool, some people say blah, 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 whatever. But investing in real estate, you should be ready. That's all I can tell you. You should be ready. You should have some money sitting there for the worst. Worst things can happen, you know. And if you're investing in real estate, you should be investing in real estate, number one, to take advantage of tax benefits. So for instance, if you own a business, or you're making really yeah, adjustable gross income is really high, you can use real estate to subsidize your taxes. But if you're just that person with your $10,000 or your 15 or $20,000 that you're going to use as down payment for a property, and you not have any leftovers for the rainy days, it's not a good way to start into real estate. But let me tell you the best way. You can, if you love real estate that much, you can invest in real estate investment trust. This, you don't need a hammer, you don't need a landlord, you don't need a management company, you don't need none of those. And that is what I do now. I don't buy properties anymore, because I'll tell you, that is the biggest headache that you can find, you can get on yourself. If you don't have to take advantage of these tax benefits, or you don't see a pretty good deal, that if you buy this property it's worth 200 and you're paying 150, if a property is 150 and you're paying 150 and you want to go do that as an investment property, you're shooting yourself in the foot, I'll tell you. It will take you about 10 years for you to get a $20,000 equity on that property. And even when you sell that property, guess what? The real estate you pay from the buyer side and the seller side, that's 6% gone. So you have to, there's just too much that you have to put into perspective. But my advice will be, for an average middle class family, if you have your personal property, that is fine. If you don't have the guarantees for rainy days, don't get yourself into real estate, because it might get tricky. You might go 3, 4 months without having rentals in there. You have to pay that mortgage out of your pocket. It can get you might not sleep good at night. I'll tell you that.
That's awesome. We have a question here from Martin Fundi, and he says, "Hi guys, let me put that up here. Hi guys, long time. Please, I have a question that most people cannot balance with the system being rigged against us. Now, can you give us? I don't know if you're listening to us, Martin. Certainly, I think I get a sense. I'm assuming here that you are talking about just the disparity in terms of the racial disparity in terms of home ownership and things like that, right? I think there are a few things that needs to be considered when you're talking about that. Number one, for sure, there is historical data that indicates that there have been discriminatory practices against people of color, against black people when it comes to home ownership as a centerpiece of wealth building in America. No question about that. There is also data that there is also data that is indicating that improvements have been laid on that more and more, minority and black people are having access to loans and buying houses and things like that. True.
Mhm.
And I think one of the things that we have to keep in mind is sometimes you have to worry about the things you can control. Okay. And the things people can control, especially people like us, are a few things. Dr. Edimo talked about one of the most critical things in getting access to loans: credit rating. Credit rating is basically your financial responsibility DNA. It
Yep.
indicates how responsible you are with finances. And let me tell you something, Dr. Dimo. You see, just the average in the black community in America, statistics show that the average black credit rating is somewhere about 570 or something, a
Mhm.
little under 600. Now, by moving the credit by 100 points to 650 or close to 700, that can bring in additional $800 billion in wealth to the black
Yep.
community. Just that single action alone. So yes, you are right, Martin. There might be all of these historical things that have held the black race behind for a while, but I want us to understand too that there are opportunities now than ever before. That is incredible if people understand what to do and people just are disciplined, and we reduce our spending, we reduce our frivolities, we become a little more disciplined with money, we become a little bit more educated, especially because the numbers are also indicating that some of the highest earning professionals in America today are of the black and immigrant community, especially the African immigrant community, right? But
Yep.
now there's a disconnect because we have people too who are saving at an average rate of 5 times more than the average savings rate in America. But at the same time, the African immigrant community invests 4 times less than the average investment rate in America. So there's a disconnect here. It means we at least have the discipline of saving money, but we don't understand, we don't have the skill, the knowledge, and the complex understanding of multiplying that money. So, yes, there might still be some of these elements that are getting in the way of that progress. But I want us to look at the brighter side. The possibilities are endless. For a young man coming out of Moliko, from University of Boya, came to America in New Mexico and started making $55,000, and today be sitting on 7 properties. Even your own story, Martin, in Minnesota, there you're an incredible entrepreneur. You've made a lot of things happen. You are employing over 100 people today. That is something powerful, in spite of all of these possibilities that are these possible hindrances that get in the way. So,
Yep.
yes, your point is very valid. But I also think the opportunities that abound today have never been abound any other time in human history.
Absolutely, absolutely. And I see where he says the system is rigged, right? But
Yes.
I think things are getting better. And we have to, like Martin, you work hard. You have sleepless nights. Things, nothing was handed to you on silver spoon, you know. We
Yeah.
grew up together, we slept on the same bed in Bamenda there, you know. So I know your humble beginnings, but where you are today, it's because this country, it's a country that gives opportunity to those that work hard. It doesn't mean that you won't fail. But the thing that we want to understand is folks have to start talking about how to make money, how to let their money work for us. Our community shy away from talking about money. We have a lot of groups out there, multiple groups. Right now, we have village meetings everywhere around the corner. Bali meeting, Bafuchu meeting, Bangwa meeting, everywhere. But in all these meetings, soccer clubs and stuff, we never talk about how we can, very limited, we talk about how we can make money. We talk about how we can do end of year parties and how we can do barbecues. So if we ourselves we don't start talking about how to generate money and how our money should work for us, how do you expect the white man to give it to us? We have to start figuring out. Majority of us, all of us have smartphones. But to tell people that you can invest $50, you shop at Amazon. Why don't you own Amazon shares? You go to Walmart, you go to Costco, you wear Nike shoes, you go to Starbucks. Why don't you just look around yourself what you invest in or what you buy? You can invest in those companies 10, 15, 20 years from today. You'll be making some good money. Majority of us don't even understand the concept of Rule 72. That simply means if your money is making 10% every year, you divide that by 72. In 7 years, you have doubled your money. Most of us, we go out there, we invest without doing a return on investment, cash to cash investment. How can we be putting $500,000 on an investment we don't even know when we're going to break even? We don't do the math because I saw Martin Frundi building a house in Santa. I want to build my own house in Santa. There come a point in time, it's not about follow, but it's about asking the right questions before we invest. Some of us don't even invest. I just want to, before we close, I just want to give you some statistics here that I saw from Vanguard, and that was as of 2025.
Oh,
People's 401k. This is scary. You know, you need $2 million to retire, and almost very few are close to that amount. Very few,
fact.
not even up to 10% of those that are closing to retirement. If you're making $100,000 now, at 3%, and again, this is conservative, at 3%, and wherever you are, whether you're in Africa, you're in Cameroon, you're in Nigeria, you're in Congo, you're in, at 3 to 5% return, that's how things are going to be expensive. So if you have $100,000 today, that same $100,000 next year, you need $103,000 to buy the same $100,000 what you're buying today. Factor 20 years from today. So you need close to 200 and something thousand dollars to buy $100,000 worth today. So it doesn't matter where you plan on retiring, things gonna be just expensive. And coming back to the numbers, less than 25 years old, the average 401k is 6,800 and the median is 1,900. Those that are between 25 and 35 years old, the average is $42,000 and the median is 16,000. Those that are 35 to 40 years old, the average 401k is 103,000. The median is 39. Those that are 45 to
Wow.
54 years old,
Those are crazy statistics.
yep, the average 401k is 188,000 and the median is 47. Those that are between 55 and 64, the average 401k is 271 and the median is 95. And 65 and plus, these are the retirees. The average is 299 and the median is 95.
Wow.
That is scary.
Okay, I think we should end on a warmer note. Okay. But I think it just confirms what we say, right? Life is going to be cruel to old, broke, and sick people. Unfortunately, I would rather know the truth and face it than to be pampered with a lie.
Oh, yeah.
All right, guys, it's not going to be easy. Everyone needs to really, really sit up, right? Everyone needs to take their financial education, their financial discipline, their financial life extremely seriously. Extremely seriously. Man, thank you guys all for participating. Dr. Dimo, any closing words before we
Oh,
call it a
yeah.
day?
Just to tell folks here, we are, I am the CEO and founder of World Smart Advisory Group. With Well Smart Advisory Group, we are a holistic and comprehensive business firm. We help folks with tax strategy, we help folks with financial coaching. We can give you the entire blueprint that will help you. If you're a business that is struggling, from a consulting perspective, we can streamline your business and show you ways to save money and show you ways on how to scale. If you're an individual that needs help with respect to starting that investment account that you've been pulling for a long time, no matter where you are in your life, we will guide you through that process. If you're already investing and maybe you're not really sure of what you're doing, we are here to guide you through that process. We have done this, we have made our mistakes. We are teaching folks now based on the mistakes that we've made so that you don't make those mistakes. So reach out to us. We are here to service no matter where you're located in this world. Right now, we are doing mostly pro bono services, especially if you're in Africa and you just need help. I have folks that are following me here, sharing my content. They ask me questions on what they're doing and stuff. We provide them guidance. Our goal is to reach 10 million people, provide them that financial literacy knowledge to move them from that mindset of just living to maybe building a legacy that will pass down to generation. And again, legacy to us is not about what you leave for people, it's what you leave in people. Thank you.
Awesome. It was a wonderful time streaming with you today, brother. I hope this session has helped a lot of people to have some clarity on how to even get started to consider investing in real estate, right? Again, real estate is such a broad topic. We didn't touch up to one tenth of it, but as we get along, we are certainly going to be touching more and more topics. As for me, if you are subscribed to my YouTube, my Facebook, following me on Instagram, you know every night, 7:30 in the evening, I do a live stream on multiple different topics from AI to leveraging wealth, building AI, right? Building wealth through AI, both as an employee or as an investor. I help first, second generation immigrants who have worked very hard, done everything by the books, but still feel behind on their pocketbooks, on their purpose, and on their legacy. I help significantly high earning people structure their wealth, teach them how to multiply that, and also make sure that the wealth perpetuates even after them. So join us on the live stream every night. I will be on YouTube, Facebook, Instagram, and every Thursday at 4 p.m. Central Standard Time. We are going to be on this live stream with my friend and brother, Dr. Dimo, to talk on some of the current events, to talk on some of the things that are moving people forward, changing people's lives, and making sure that your last name is never forgotten, even after you're gone. Guys, it was a great plumping pleasure hanging out with you, brother. Until the next time, be well, be blessed, and by all means, everybody, never stop being a blessing to somebody. We are out.
Ciao. Take care,
Awesome.
guys.